Thank you for watching this video. If you're in the market for a mortgage, it's likely not a surprise to you that your credit score is a huge component of how that approval process goes for you. Surprise, surprise. But everybody needs to know or should know where they stand in terms of credit. I highly recommend to anybody listening to this, use some of the free software that we have available to us today. We're actually very lucky in that sense because things are very convenient for us. I know with my mobile banking app, I can log in there 24/7, pretty much check my score with the click of a button. Likewise, there are very popular systems out there, Borrowwell, Credit Karma, that a lot of people, a lot of clients that we know use to monitor their own credit. Are they going to give you the detailed reports that the banks would otherwise use to qualify? They're not going to, but they're still really good benchmarks to know where you stand and whether there are any areas for improvement. Now, looking at this chart here, you'll see that they have 5 different ranges, and I want to be clear that very good and exceptional being this right here, it doesn't matter where you sit in that. It's all good. It's all good. You're going to be treated the same. You're going to get the same scores and affordability. It makes no difference. Kudos to you if you sit in this range, though. It's very hard to achieve. It takes a long time. So congrats on that. Good is actually going to get you the highest affordability. The highest affordability is actually right at the 680 mark, to be honest, but they have it here as 670. It's going to get you the highest affordability. You're still going to get the same rates whether you fall maybe from the 650 onward range. You actually don't get favoritism in terms of rates by being in this range here, but you will get a higher affordability if you're sitting at a 680 and above. 680 and below is a different threshold of debt servicing requirements, so it will afford you slightly less, but it's still a very good spot to be. They have it here as fair, and to be honest with you, if you are sitting in this range, you may or may not qualify for a 5% minimum down payment. We would actually need to assess that to see. Sometimes, and I think the reason I'm saying that really is because somebody who has a 590, there has to be a reason that's causing that. Somebody who's at a 600, there has to be a reason that's causing it to be that low. It's still a good score, but there's something happening on your report that requires some further assessment. And that's kind of when we get into the nitty-gritty of the very detailed report and we find those problems and we work with our clients to help improve them. Anything 580 and below in this red area here, it's not impossible for you to get a mortgage. I would actually put the cutoff at 500, to be honest. If you're below 500, it is actually difficult to get a mortgage. We'll have to have a further conversation on that. But I would put 5 to 580 in this range here as somebody who can still get a mortgage, but if you're purchasing, you're going to need 20% down versus the minimum 5. And if you're refinancing, you're likely going to have to refinance through alternative lending, which is going to yield a higher interest rate. You don't have to do it on a 5-year term. You can do 1, 2, 3 if you really want to. Again, requires further conversation, not something I can fit into a 5-minute video. But then taking you to the next chart, just really quickly to help demonstrate what variables the credit reporting system uses to determine your score is 35% payment history. So are your debts and credit trades paid on time consistently? Amounts owed. We refer to this as credit utilization. So how much do you owe on each one of your credit trades? It's not a problem to owe money. It's just a problem if you're maxing out on your trades. As an example, if you have a $10,000 line of credit and you are at $9,999, that is going to impact your score even if you are paying it on time, believe it or not. 10% is credit mix. So what types of credit trades do you have? That could be car loan, student loan, credit card, line of credit, personal loan, as well as others. A good mix yields a better score than somebody who maybe just has one credit card, as an example. Length of history, so how long have you had credit? The longer the better and the stronger your score will be. Although I've seen new credit applicants with pretty strong scores. Generally speaking though, the longer the credit history, the better your score. Last but not least is new credit. How new is your credit? Do you have any new trades? Somebody who is 18 and getting their first credit card is not necessarily going to have as strong of a score as somebody who is tenured with credit. We're happy to run your scenarios for you. So thank you again for watching this video. We're here for your constant support and we look forward to hearing from you.